Good morning. I hope you guys doing well, and welcome to today's edition of the London Session Open. Today is March 19, 2020, and we're going to take a look at the markets as we usually do. Of course, we're starting a little bit earlier today. Reason for that's quite a busy day for me, and I'm sure as well you guys want to keep an eye out, check out the markets earlier, because then we don't miss out on the big moves. Okay, if you're new to this, you're watching this maybe on YouTube and you just stumbled upon this channel, this is the ATFX YouTube channel, and we also send this on investingcube.com. So ATFX is a broker and a FCA regulated broker, and my name is Alejandro Zambrano. And if you spend with me the next 15 minutes, we're going to take a look at the main markets, and we're going to talk about the coronavirus and how that is influencing the financial markets and everyday life. We're also going to talk a bit about what the governments are doing to step up and how all of this could influence the financial markets. And we're going to take a look at the euro dollar, pound dollar, dollar yen, gold crude, and the S&P 500 and the DAX 30. If you do have any questions, you can just pop them there in the chat box, and hopefully I can answer a few before 10 a.m. because we will need to wrap things up before that. In the chat box right now, we have Maurizio Oliveira. Good morning to you, sir. I hope you're doing good. I'm happy to see you here. If anybody is watching here, you want to say hello, you can most welcome to do that as well. Okay, let's begin. So what's going on then? So let's begin with the good news. So I hosted a special webinar yesterday about the coronavirus. I'm gonna upload a video for you later so you can check that out. But I do understand, for example, that the number of cases and people getting the disease, the coronavirus, is increasing. So let's take a look at that, how the numbers are increasing, because it's important to see the numbers and how they are progressing. And we have seen some strong moves in Italy, in Spain, and in France. Germany and the UK are lagging behind, but they're on their way. In the UK, new measurements can come. I mean, they already implemented them. So from Friday, pretty much, schools are going to be closed. Let's see if I can find the data now. I think I scrolled a bit too fast here. They have organized this very special in a way that they have everything in one big page. There we go. So we're gonna look at this from a trading perspective. So in Italy, which is the first one to actually implement hard measures, is the first country here. So if we're looking at the numbers, we still have some staggering numbers, like 3,223 cases yesterday, and this is still pretty much pointing upwards. And now we have Spain added to the list, we have France added to the list. So France and Spain, they pretty much implemented these things on Monday. So it's going to take a bit of more time because the Italians are ahead of us with about 1 week. And well, almost 1 week and 4 days, really, or 3 days. The numbers are going to increase in Spain. They're going to increase in France as well. I mean, even in the UK, they think there's some 50,000 people that have the new virus, and people told to work from home if possible. But we are starting to see some positive changes, and especially from a market perspective. And I think this could potentially be seen as something positive, and maybe they will go through with this in more places. And I'm especially thinking about Germany, UK, and the United States, because those markets are really important for the world economy. And I was looking at the data. So when you look at it here, yeah, that's a high amount of people, no doubt. However, from a percentage point of view, it's actually working what they're doing, because this is the growth rate. So I did this yesterday. So 25 days ago, they had, on that day, 25 days ago, they added 67,000 new cases to make a new total of 76. So for that day, 80% of the total was new cases. So that was the growth rate, right? So initially you had very high growth rate, pretty much 80%, 39%, 46%, 29%. And for a very long time, they pretty much lingered around at levels. But you can see here in my chart where it says minus 11. They were pretty much at 21%. And they were from here, from minus 15 to minus 11. So for 4 days, they were pretty much around this growth rate. But you can see that from pretty much minus 10, minus 11, you have the numbers coming down. And for the last 2 days, the growth rate has been 12%. And this is really good because in China, we had a similar pattern where you could have almost 100% growth in the cases, and then they average about 35%. The average now for the last 25 days is 24%. But now we're at 12. So we're starting to see the beginning of the end of the growth rate. And maybe I had to give it another week or two, we can see maybe sub 10 readings. And that's going to be a very, very, very big step. Now, we've been looking at things like webcams from webcam, for example, in Milan to see if there's any activity. And you can see it's a beautiful and sunny day, but the square is pretty much empty. You got a few people walking here. This is the police. Just a few days ago, this was packed. Then we did as well just a few days ago and last week on Friday. There we go. This is Madrid, Puerta del Sol, and you can see how this is policed. Well, now we're going to watch some. One is to buy some toothpaste, but you could see that there was not a lot of activity. Unfortunately, though, Madison Square Garden, I know it's way too early over there now, but we can see pictures from yesterday. So it's raining right now. Looks like to be raining in New York. So this is yesterday. It looks to be like yesterday evening. You can see people here enjoying a skateboard and just having a drink. But you can see here, for example, how there's still people on their way to work. You got tourists taking pictures and stuff like that. And this has to change. Until these guys start to lock down and don't go out, the US is going to continue to be a hotspot. So we need to wait for the US probably to lock down. When they locked out, you're probably looking at maybe the beginning of the end, and maybe the markets, at least in the short term, bottoming out. I'm talking about stock markets. That's what I think, at least. And then maybe it will be a delay. It took about 2 to 3 weeks in China before things calmed down. Now in Italy, as you can see, it's taken about 10 days or so, and the growth rate has already dropped quite significantly, and it's probably going to continue to drop as the Italians are doing a very, very good job right now and self-isolating. And then again, France and Spain is doing the same now. So things are going in the right direction. Other thing as well, like yesterday, the ECB pumped in some, I think it was 750 billion that they're going to announce. So the new QE program, they call it something like the pandemic emergency package. Has some similar name like that. Yeah, Pandemic Emergency Purchase Program, the PEPP. So that is 750 billion they're going to pump, and they're going to push this until the end of the year, and they're going to be flexible about it. Because what happened at the Thursday's meeting last week at the ECB is that the ECB told us pretty much they're not going to contain spreads between sort of Germany and Italy. And if you remember the financial crisis of 2008, 2009, and also the Euro crisis that came after that, government bond yields in Greece, they declined. They declined in Italy, they declined in Spain, they declined in Portugal. And the problem is that the local banks, they all hold local government bonds. So when these become worthless, the banks themselves become worthless, and then people get panicked. They try to get their money from the bank, and then that doesn't work, and some banks were at risk of collapsing. So The ECB told us last week it's not their job to make sure that interest rates remain low in Italy. And what happened here is just that interest rates started to go much higher. In fact, let's see if I can find that. I used to cover that a lot before, but I haven't watched it so much lately. Let me see if I can find it. I don't know. I don't think I have it right now, but key point is this, that let's actually see. Yeah, actually I found it here. So this is Italian. So this is a daily chart. Look at that, guys. I even wonder if this is correct now. Is this correct? It is correct. Oh wow, I didn't know it was such a bad state. Look at that. Look at this. The Italian government right now, to borrow money, they pay 16.32%. So if they want to borrow money for 2 years, they pay the higher rate, if not similar rate that I do on one of my credit cards. That's a lot of money, 16%. If you borrow money at that rate, borrow a lot of money, you're never gonna get out of it. So obviously, it's not possible for the Italian government to borrow at these interest rates. So you can see here how the market spiked up. This is on the 17th. But the meeting was on the 12th. So we were here. And from then the market just went crazy if this is 100% correct. On the other hand, you have places like Germany when the interest rate is really low. So right now, this is the difference between the German and the Italian interest rates. And I'm not sure if this is 100% correct because it's almost bizarrely high. But effectively, the Italian government pays 16.64% more than the German government. If we look at the German government bond alone, that yield is at -27. So if the German government now goes and borrows money, they're not gonna pay. They get paid to borrow money. So they're putting out all this money. And how much money is this? This money, the 750 billions plus the other about 120 billion they already promised, will amount to pretty much everything that the governments for this year initially planned to issue. So governments will usually borrow money. So effectively, this is going to cover all of that, which is quite a significant amount. Of course, people are going to spend more money now. So maybe the ECB is going to do even more QE, but this is the first big, nice step. Last time the ECB managed to get it, I think they're going to probably manage to do it again here as well. What else? So there's a bunch of governments coming out with fiscal support. So I think it was Austria. So yeah, so Austria is going to push out it's an emergency package that amounts to 9.15% of GDP. That's a lot of money, 9.5% of GDP. You have Portugal that announced a package of 4.3, which is good. And then you have Greece that announcing a package of 2% GDP, which is actually not very big. I think as well, depending on how you measure it, I think what the UK has done already is that they're gonna push about measures that would amount to 15% of GDP. At least that's how I understood it. So they're making all of these big pushes to salvage the economy. But I think sort of the key point here would be what's going to happen with the US. Are they going to go into lockdown faster? And the same thing with the UK here as well. Are they going to do that faster? If they do, then that will probably be the beginning of the end of the first wave of the virus. Then we need to see what's going to happen after that. Are we going to have a situation where people, are let out in the community in segments or tranches? So certain people in London, for example, can go to work, other can't. If it's going to be something like that, it's going to be much more difficult for the economy to come back. But maybe they will. We'll see what happens. I'm not sure exactly how it's going to work out, but hopefully they'll do like the Chinese. We can go back quicker, and then things go back to normal quicker. All right, let's take a look at the markets now, and let's take a look at some of our charts. And we're going to begin with the euro, and the euro is in a downtrend. And we're actually trading up here at 6 a.m. in the morning, and I'm looking at a 1 hour chart. And if we do swing up to 109.36, I'm going to be bearish, and I'll be bearish as long as you trade below 110.53. And I think we can attack the downside. And then we have the 2020 low here. So this has been a real roller coaster where the market reached a 2020 low and then went all the way up and clawed back 2 years of losses or so. And then it went all the way back down, and all that happened in 31 days, so 1 month. Going forward, I think we need to be a bit careful because we're dealing with a megaphone pattern where we have this upward sloping trend line and that downward sloping trend line. So it could be that this market is just going to bottom out here and head back to the middle. That would not surprise me. But if we get a decent close below the 2020 low, I think we can go down to the next level, which is the 105.70 level. GBP USD, what a massive sell-off yesterday. So people say it's because London was going to go into some sort of lockdown. London in a lockdown, of course, wouldn't be great. I mean, it's already a partial lockdown anyway. I haven't been to the city yesterday. I live very close to the city, but they're saying that they're gonna reduce the transport network and only key people, so nurses, people that work in transportation, and so on and so on, are gonna be able to use the metro stations. So what's gonna happen is that we're gonna be isolated where we live. But then you still have a lot of people just working from home, so I think we're gonna do perfectly fine. I think it's the Brexit negotiations that is worrying people. From a technical point of view here, I'm focusing on this high, which is the high from yesterday. So below that level, I'll treat the trend as bearish. That's the 121.35 level. If I take fib from the high to the low, I'm expecting maybe a 50% correction, and then from the 50 level all the way up to this level here, I think people are gonna be ready to sell. So they're gonna look for reversals in this area to then attack the low again. And I think we can eventually reach 113.65, followed by 112.05 and 111. Here's the dollar yen. So the dollar yen, I'm finding this very, very difficult because we don't have a very strong trend here. So I had to put this Andrews pitchfork. And you can see here that this upper trend line has done a good job pinpointing reversals. And then you have the lower trend line, which worked here well. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You work good for 10 times, and then you got 1, 2, maybe 3, 4 times where it didn't work out and it went to the next level. So what I'm doing here, I see this as two options. People selling here with stops on the other side, whereas people that would think we're gonna go higher, they're probably gonna wait to sell here with a stop on the other side. But ultimately, as long as you're below this high, we're gonna probably go down to the midpoint of this level, the median line, and then maybe all the way down to the lower side. If we look at gold prices are finding some support just above 1445, which is this level here from November 2019. And if we look at it from a 1 hour time frame, we were in a very, very aggressive short-term downtrend that ended. The market is now much more just trading sideways. It's much more flat, and you have this level here. You can definitely say that the short-term trend ended, but you still have this level here. So if you're not comfortable, you don't think this is gonna bounce, then I would wait for 1543. Take that out, and we can probably go a bit upwards. If you want to take a bit of a gamble, which is what trading is anyway, most of the time, then you will look to just be bullish here. On the other hand, if you're really, really bearish, then you will probably sell on the break here. Alternatively, sell here with a tight stop loss on the other side. For now, though, it looks like this is gonna bottom out, so I'm gonna maintain this view. Here are crude oil prices. They declined to $20.37. And this is again sign of panic. We're going down, people are very, very scared, but this market itself has some long-term fundamental issues with overproduction, oversupply, and now because everybody's shutting down, we don't need as much energy as before. So you have this situation here. And I think they're gonna try to keep crude oil prices low for a long time, because both the Saudi Arabian government and also Russia, which are the big producers in the world, they want to oust the smaller privately owned crude oil productions in the North America and also the rest of the world, where they're using fracking to extract crude oil. And a lot of these companies, they raise money, and of course, if the oil prices are this low for a long time, many of them go bust. And then a lot of people, they literally just want to scare people away from the market. So I think this can continue to be low for longer. But technically here as well, we're looking at a short-term downtrend below 30.51. And if we take fib from the very high to the very low, I'm looking for a little bit more than 61.8% correction level. I'm also looking at this low here, where if we do have a retest, people are probably going to sell here somewhere. If you think I'm putting my levels too far away, then maybe a 50% level could be sufficient. That's what I would focus on. All right, this is the German DAX. So German DAX continues to be bearish, and it's actually becoming really interesting, because what's happening here is that this is getting very, very, very tight, and at the same time, we're not actually trading much lower. Since March 13th, which is Friday last week, we have moved down a bit, but we're only down with some 5%, whereas in the initial leg, you know, we went down with about 36%. So this is actually good, because you need to remember this. Things are getting priced in. We're going to have some data from the US initial jobless claims today, and that data is being priced in. I mean, if that data is bad and the market doesn't care too much, that tells you that people already know about it. That's why they sell. They sell here. They sold here in February because people could foresee that come a month from now, we're all going to be in trouble. And governments as well are slow in reacting. So they're like, if we don't do nothing now, we'll be going to be in even more trouble in 3 months. So they're acting now. And that's why it's important to keep an eye on what's happening with the coronavirus, and in particular in the US. So when they do start to implement harsher conditions, it will hurt the economy. But if stock markets are already down, like this one in Germany, if they're already down with some 40% almost from their all-time highs, then I would argue that a lot of it is already priced in. So this is interesting. For now, though, the trend is bearish below 190, below 91.75. And I think some traders, if we go up here, they will try to sell. And if we take out the high, we're probably going to go up a bit, then probably going to go down a bit, and then probably go up. But it will be the beginning of carving out a major high, a major low. Here's the S&P, where the market is in a downtrend below 2,251, and people are probably going to try to sell at 2,431. Okay, let's see if you guys have any quick questions. However, I need to run in literally 2 minutes, so I'm going to see if I can answer some quick questions. So we have Ugo. Good morning to you, sir. I hope you're doing well. And we have VS saying good morning as well. And BN says that South Africa went from 61 cases last week to 161 cases in 2 days ago, and the South African rand rallied to a staggering low of 17.3 points versus the USD. With the ECB pumping that amount of cash, will there be a major movement on the euro pairs? I mean, it's always difficult, but it should be positive, no doubt. So if the Italian yields are really at 16, then there is an opportunity to buy Italian government bonds, maybe. I know some people that made a lot of money on that a few years ago, where they were buying all these bonds because they know that the government is sorry, because you get them at a huge discount effectively. So then what happens is that you buy them, and then you have ECB helping you. So they literally act like some sort of a stop loss. Of course, there's no guarantee that you're gonna make your money back, but if you make it outright, you can make good money on that. And so it definitely lowers the risk, and it should ultimately help the Eurozone economy, and it should help Italian banks that are probably very oversold. And you probably have as well helping a bit of the euro to some extent. But how is it going to affect the euro dollar immediately? I'm not really sure exactly. And the reason for that is because we have a situation where this more than just the euro. It has to do with people in emerging markets, for example, like South Africa and Turkey. You know, a lot of times they don't get, if they want to borrow money, big corporations there, they can't borrow in the local currency. They need to borrow in dollars. So if you borrow for 10 million and then your local economy is collapsing and your South African rands are worth less, so your Turkish lira worth less, then you need to pay back the loan in dollars. But if you're making less money, it's going to be more difficult. So what they do is they go out and hedge the whole position in the markets. So they buy dollars today. So when they need to pay back that money, they already have the dollars. All right, guys, I need to rush now because I'm going to jump into another call. I'm receiving a call now as we speak. But I want to thank you so much for joining me this morning. I'm sorry I couldn't reply to all the questions. Tomorrow should be normal, and I'll have more time for you. Have a great day, guys, and thanks so much for watching.